I'm going to walk you through another very, very powerful strategy that I'm looking to get involved with myself this morning. As I came into my charts, that's why I look tired, but there was a trade set up on the radar that was right at completion, so I got involved just now. So I want to share that with you while it's hot off the press, and I'm going to walk you through the entire thing. So seems like you guys are enjoying these types of strategy videos. If you are, let me know in the comments, because we will release one or two or however many we need to when they play out, because we can only do them when they're there, right? But this one's on the pound yen, and the pound yen. So we are bullish on the pound yen. For those of you who unfamiliar with trend continuation or trend following or trends in general, if you're looking at the bottom left to the top right and it's going up, if you could say that's a bullish trend, you're in the rough ballpark. Obviously, there's some technicals behind that, and there are some little factors that will give us clues as to when that trend is ending and all the rest of it. But let's just say, for instance, if we're looking at this chart as a layman, this is a bullish trend. Okay, we're going bottom left to top right, and we've been bullish. And in December, we actually broke and closed above a major high back in July 24, which is here. Significantly higher as well. We had this big bullish run, and what that says to us is there was some protection at this level, and we held that level for a bit, and then the bulls really wanted to get above that level and close above that level. So what that means is there should be some protection there, and it should continue up, right? And we saw this big bullish momentum, so we're in a bullish run. So what that does to me is it gives me a bias that I want to look for bullish trading opportunities. I just want to look to get long on this pair. I don't want to look for anything else that will conflict with bullish opportunities. So when I go down to my trading time frame, I'm looking for setups that will allow me to potentially trade that bullish setup or get involved with a long position, right? Now, just recently, what we saw was this pattern here. And I'm going to explain what this is, because this is a very, very common bullish pattern. It's called a breakout pattern, or a pennant, or a flag, or a wedge. People have different names for these things, but let me just quickly show you on the iPad. Essentially what it looks like here is you have price put in a big run, and then you consolidate sideways for a bit, okay? And if it's a compression channel, the tighter this compression, it compresses down, putting in lower highs and higher lows. And the tighter that compresses, the stronger the breakout. Okay, so it normally does something like this. But there's also something called a breakout and retest, which is kind of like a fake out. So if I just scrub that off, it's like a fake out and then a pullback. So it's a breakout and retest, and then we see the rally. Okay, so that's another great indication of a continuation, because we've broken and closed above this high here. Now, if you go onto Google, you're going to see a ton of these different flag types: pennant, bullish flag, pennant wedges, whatever you want to call them. But this pennant here is the most similar to what we're looking at right here. Okay, so if we go back to our chart, you'll see I can draw this on. This is what we was looking at, right? We had this flag set up right here, where we had these kind of compression channel going on, right? And we were compressing, and then we had this fake out to the upside, or breakout. We violated the previous high at the start of that channel, and then we pulled back down. So we had this kind of thing go on. Let me just bring on the arrow tool. We broke out, right? And then we pulled back down, and the middle of that channel is going to be the most, like, the optimal entry. And I said to my live room guys, I said, look, I'm going to look to trade this, but I can't trade a breakout, because I'm not allowed to trade compression channels per se on this particular pair. And I said, but I am looking for bullish opportunities, and maybe there's a way that I can get involved down here that will still meet my trade plan rules and allow me to get involved, but I could tweak the way that I manage the setup so that I can extend my targets to capture that big move. And this is what we saw. So I dropped down to the 60-minute time frame, and you guys are going to be familiar with this if you've watched other videos on this channel. But there was another setup that could allow me to enter at this level, and that's what we call a bat formation. Okay, so those of you familiar with ratio patterns, what the bat formation is a pattern that looks like this, right? So basically you're looking for a run, an impulse leg, then you're looking for a 50% retracement minimum, okay, but you're not allowed to touch the 618. And then we're looking for a 382 retracement minimum on the C leg, and then we're looking for an 886 completion from X to A. So if you was to get the Fibonacci tool and measure this, right, you'd be looking for that 382 for the B leg, and then you'd be looking for a 382 for the C leg, and then you'd look for an 886 completion down here from X to A. I've done a whole video on this, which you can go and watch right here. I'll put the thing here, and it's a full tutorial. You'll get the download, you'll get the step-by-step instructions on how to trade that strategy. So go and watch that if you haven't already. But that's called a bat pattern, and that is something that I do trade on the 60-minute time frame on this pair. So let me just draw this out and show you how I got involved. So if we go for the Fibonacci retracement, you can see that if I bring on my triangle tool here, right, and go from X to A to B, you can see that we hit that 382 there, but we didn't hit the 618. Okay, so that's tick, great. And then what we did is we were looking for a 382 from A to B, which we did right here. We hit that 382, okay. And then the last thing we're looking for is the 886 completion from X to A. And that is going to be X, A, B, C, D completion. Now what's lovely is that D completion, we had this nice rejection candle, which is already a nice sign. Because first of all, we're getting stops below X anyway, which gives our stop loss some breathing room and some protection of support. But second of all, we've had this nice rejection candle, which is a great indication that as market starts to slow down, we're starting to see these rejections and clues that we might push to the upside. Now, because of the nature of this pair, I won't be trading an extension for first targets. I could potentially trail my stops, but I'm not going to. And the reason I'm not going to go too greedy with the targets on this one is because at the time of this recording, it's Thursday, non-farm eve. Okay, tomorrow is non-farm Friday. Okay, and if it wasn't non-farm Friday tomorrow, where we have the most erratic movement in the market, I would split my position and I would take profits up here as well. But because of where we're at in the cycle of the month, I'm going to be taking all of my profits off at a 382. So my profit target is going to be here. In fact, let me show you the orders. Okay, so this is the orders. This is where I got in. As you can see, I'm going to have to adjust my target a little bit now because we dipped down a little bit with this rejection candle. So I'm going to have to just tweak that down to the 382 and confirm that. But it's still more than a 1-to-1. Still a great looking setup. And this is what I'm in. So again, I'm going to end the setup there because I don't like hindsight stuff. I don't want to only post out stuff that that works. In fact, if you watch my last video on the Aussie CAD, it went in our favor. It worked like perfectly, and we almost tested that high, but the setup didn't complete. Therefore, there was no setup for me to get involved with there. Okay, so I couldn't actually involve myself on the Aussie CAD. If you were more aggressive, okay, it doesn't mean to say that you have to miss this trade, because like in tier 1 trading, for instance, we teach multiple approaches to different scenarios, different setups, and multiple approaches to get into the same idea and the same opportunity. And one of those is a 3-bar reversal. So if you're looking at the if you look here, we had this 3-bar reversal, which is, this is a perfect textbook 3-bar reversal where you would have got in at 93.27 and you would have caught that run over. You know, you would have caught that already. You'd be in that already. And that's another more aggressive setup that will enable you to get involved with the same situation, the same opportunity. But so they don't all play out, right? They don't all play out, and you certainly don't win them all. And you're only ever going to succeed at trading when you get to grips with the fact that that is true. You know, if you're chasing all these winners or best strategies or best setups, or that strategy doesn't work, oh God, that's a terrible, it's rubbish. You can make anything work. You know, trading is about identifying patterns that happen frequently and then building consistent set of rules around them so that you capitalize on the optimum trade setup. So you're minimizing your risk, maximizing your reward to risk ratio, high probability, and then you're managing your position size. And then you just trade that consistently by having the discipline to know that it works. And the way that you know that it works is because you've tested it all. You've tested it and verified it and repeated it. And now you're ready. You've got the confidence to watch your money be deployed with confidence, knowing that some might not play out. And guess what? You're going to lose some. But overall, over a long period of time, you're going to win. And that's it. That's what trading is, guys. Unfortunately. And if anyone's telling you different, run a mile. But I hope you liked this video. It's another little strategy that I'm in. I'm putting my money where my mouth is. I'm about £400 up at the moment. Who knows? Hopefully we can get in and out of this before non-farm Friday, because I'd like to close off my orders before that. But we'll see. And if you're in tier 1 trading, I'll update you guys inside the platform. Until then, have a great rest of your day, and I'll see you in the next one.